Hey traders, welcome to Quantsapp. My name is Varun, and a lot of traders ask me, Varun, how do you write options? So I get that question because option writing is a lot harder than option buying, right? We are facing undefined risks. We are actually writing options. We are taking a lot of risk for very little reward. So a lot of people, a lot of traders think that it's not worth the risk. But the people who want consistent income or the people who want consistent profits, even though less, they prefer writing options because whenever you are writing options, you have a higher probability of making money, right? So it's that simple. Okay, so I will show you today how you can write options, mainly non-directional writing, because non-directional writing can give you the most returns overall. And after that, I will show you how to manage your position as well. So there are multiple things. There are some key Greeks that a lot of traders miss out. There are some key factors that a lot of traders don't look at as well. So I will explain that with a simple chart that we have at Quantsapp. Okay. So I hope you guys enjoy. The support has been tremendous lately. These English videos that we have started to do recently has been taking off extremely well. So I am very happy with that. Just make sure that you guys keep on sharing your feedback. Make sure that you guys keep on giving me tips to improve so that I can be the best trainer out there, right? I can give you the most quality content that you guys deserve. Okay. Okay. So let us start without wasting any more time. I would like to explain a few key concepts before I start the session. Okay. So let me just maybe share a whiteboard. Maybe I'll share a whiteboard. Okay, so you guys should be able to see the whiteboard right about now. We'll let it load. All right. Okay. Okay. So this is now a whiteboard. Okay. Now let's start with why write options. Okay. Why does a person write options? That is the biggest question that a lot of traders have. Okay. So whenever we look at market usually moves in two directions, right? So market goes bullish and market goes bearish, right? Market moves in two directions, right? So in this case, if we, let's say, buy a call option, let's say if I write call buy, if I buy a call option, my view is bullish. And if I sell a put option, then my view is bullish, right? If I buy a put option, then my view is bearish. Okay. Put buy. And here I will write sell call. Okay, let me just type it, sell call. It's this simple, okay? So whenever market goes bullish, you can either buy a call option or sell a put option. If market goes bearish, then you can either buy a put option or sell a call option. So it's that simple. Now, if I am expecting the market to go bullish, would I buy a call option or would I sell a put option? So if people are smart, they'll go and buy options because for a directional market, option buying can give you a lot more return at very minimum risk, right? Same thing when it market goes bearish. Then where do writers come from? Why do people write options? If you are making very little money as opposed to a lot more risk, why do you sell options? If you guess that there is another view in the market, then you are correct. So market just doesn't go bullish, bearish, and sideways. Market moves in this direction, right? So market doesn't just go bullish and bearish; it goes sideways as well. All right. So this is how I would depict a sideways market. In case of a sideways market, you can sell a put option and you can sell a call option. Right? You can either sell a put option or you can sell a call option. You can do either of these two things. If you buy options and if market goes sideways, in that case, you are losing money. So that is the most general idea that a lot of traders don't know about, writing options and they just go and keep on buying options. But if the market goes sideways, then option writers will always make money. And now, if you look at any chart, okay, I'll just share a Quantsapp screen. Okay, this is the screen of Quantsapp. So I am on the web app. This is web.quantsapp.com. But if you're on Android or iOS, you can just go and install the app from the App Store as well. Okay. So on web app, you don't need to install anything. So desktop, if you have a desktop, then you can just go to our web app. I'll just open charts. You can search for charts. You can open charts, order and trade. This is the tool. Okay, let's say if I add Nifty's 5-minute chart. Okay, this is a 5-minute chart of Nifty. Okay, what do you see? Majority of the times, the market does not move that much. Majority of the times, the market does not move as much. A lot of times, market is sideways. So you can see here how big of a move it was. Okay, when it comes to option writing. So the market opened here and it closed somewhere around here. Okay, so market has actually fallen here by around 18 points, which is good. Okay, what about this right here, today's market? So today, if you look at the market, market has opened here and it has closed here. 70-point move, which is good enough. Okay, nice. So both of these days, market was moving well. What about this day? This day, if we see, market opened here, market closed here. Very small move, around 24-point move. Okay. Here, if we look closely, market opened here and market closed here. Again, 50-point move, very small. Here, if you look closely, market opened somewhere around here and it closed somewhere around here. Okay, 60-point move, again, quite poor. Here, if you look closely, market move opened around here. I'm just plotting the opening and closing prices. Market closed around here. 30-point move, very poor. Here also the same thing. So you can see majority of the times market is bound to a range. Market does not actually always act in a trending manner. So in that case, what should an option buyer do? In that case, option buyer will suffer a loss. In that case, option buyer will suffer a loss, right? It's that simple. Option buyer will suffer a loss. Very rare instances, you can see that market moves beyond maybe a 60-point range. There are very rare instances. Majority of the times, market is range bound. Hence, option writers tend to write options so that they can capitalize on time decay, right? So people who do not know, options always has a factor of time decay. So whenever you are writing options, time decay is in your favor and premium keeps on decreasing due to time decay. So that is why people write options. Even on a positional basis, you can see that the market majority of the times is range bound. So writing straddles and strangles is the way to go. So straddles and strangles are when you buy or sell two options, both call as well as put. So for straddle, it has to be same strike prices. So a cleaner example would be if I buy both the at the money call and put option, then it will be a long straddle. If I sell both at the money call and put options, then it is a short straddle. So same strike price, buying or selling both call and put option, right? So that is long straddle or a short straddle respectively. What about strangle? So in case of strangles, you go on separate strike prices. So maybe if market is at 20,000, you will go and write a 20,100 call option and 19,900 put option. So you are selling both of these options. So you are creating a slightly wider range. So in that case, you are going and writing a strangle. All right. Now let's look at the break-evens and stuff. Let's say if I go to architect, I just go to architect. So this is options architect for people who do not know. Okay, I'm going to a custom strategy. So this is the at the money option. So at the money call, I will sell. Okay, and at the money put, I will sell. Okay, at the money call and at the money put. Both of these things I have sold. Okay, so today's market is pretty much done. Let's say if I check tomorrow's market or if I'm about to sell this option for tomorrow. Okay, just an example. How much of a time decay am I gaining? So look at the break evens. Okay, so these break evens, these are tomorrow's break evens. So if the market closes between these ranges tomorrow, then this strategy will end up in profit. Tomorrow the market should be between these range. So what is the range? So 23 350 and 23,600. So 350 and 600, it gives me around a 250 point range, which is a decent range for tomorrow. All right, it's a 250 point range if I'm not wrong. Let's see on this chart. Right, for tomorrow, yes, so around here, so it's a 250 point range, which is good enough. All right, so this is my break even for tomorrow, break even 1 and break even 2. Let me just set the upper and lower bound a little bit better. So what is the upper and lower bound? Okay, so let's set it to 23,000 and 24,000. Okay, 23,000 and 24,000. We don't need a lot more upper and lower bound to analyze this. Let's check this. Is this good? Yes. So 23,350 and 23,600. So if the market stays between this range, tomorrow I will make money. Right. So you can clearly see that there is a very little chance that the market will move beyond that 70 point range. So here we are getting 250 points, which is 125 points above and 125 points below. So there is a very good chance that I will end up making money when it comes to selling a straddle. Now, let's say if I want to widen this range, let's say I'm expecting a bigger move tomorrow. If I want to widen this range, so what I will do, I will sell a slightly out of the money call. Okay, I will sell a slightly out of the money call and maybe a slightly out of the money put. Okay, so this will be a slightly out of the money put. All right, this is a different range now, 100 point, 50 points above, 50 points below. You can see the break even has changed here. Break evens have changed, right? You can see. Now you can go slightly more OTM if you want. So a slightly lower put and a slightly higher call. Now the break even will change again. You can see that the break even has changed again. So break even keeps on widening. As the range keeps on widening, the break even also keeps on widening. So this is how you can analyze these things. So you can analyze these things, you can analyze these strategies, you can see what kind of a move you're looking at, and then you can write options. Another thing, another very popular thing that a lot of traders look at is open interest when they're writing options. So if I just go to open interest tool, okay, this is open interest tool. I will just look at the change in open interest. So here on the top right corner, you can go to the horizontal chart. Okay, and this is the change in open interest. On the right hand side, you can see that this is the change in open interest. Okay, this is today's change in open interest, absolute change when it comes to open interest. Now, if you look closely, maximum open interest is at the strike of 24,000 and 23,000. So 24,000 is the heaviest call, 23,000 is the heaviest put. So most call open interest is at 24,000. Most put open interest is at 23,000. So there is a very good chance that market could expire between these ranges. And if you look closely today, a lot more call addition has happened as opposed to put addition, right? There isn't a whole lot of put addition, but there is a whole lot of call addition. So what you can do is Monday at around 9:20. So today it's Friday. We are over the weekend. So maybe whenever you want to trade at around 9:20 in the morning, if you want to write options, you can check out which strike has the most open interest addition. Which strike has the most open interest addition, you can check that out, and then you can enter a trade. So most open interest addition from previous day. So this is previous day closing. You can see here previous day closing. It's 21st today, and we are looking at the data from 20th of June. Okay, so this is the open interest data from yesterday's closing. So you can just look at it and then you can create a range. So as of now, if I want to create a range, I would say 23,000 call option or 24,000 call option and 23,000 put option is a pretty safe bet because addition is also quite good on these strikes. But even the at the money strike has decent addition. At the money strike on the call side has decent addition, and 22,900 put option has a lot more addition. So there is a good chance. So I would say 23,000 call option and 23,500 call option and 23,000 put option would be an ideal range if I want to write option. So let's check that out. 23,500 call option, right? So based on future price, 23,500 call option and 23,000 put option. Okay, this would be the ideal range, at least according to me. Let's look at the break evens. Okay, so these are the break evens as of now. You can see this is something that you can keep in mind. Okay, so yes, this is something that will be really good because I'm expecting the market to fall down slightly tomorrow, right? So this is the PNL on 22nd of June, right? This is the general idea. Okay, so that is how you can use this. Now, more importantly, the most important part actually is to analyze what will be the trade management scenario. How will you manage the trade, right? It's not about actually identifying a range. It's about managing the trade, right? So I can just go and write a straddle. Okay, so 450 call and 450 put, I will write. Okay, 450 call and similarly 23 450 put, I will write. So this is a short straddle. You can see it's written short straddle, and this is the at the money option. So I have sold the at the money call and put. I have gotten decent premiums here, and this is my break even for tomorrow. Okay, this is a good break even. Now, based on this, what should be my trade management scenario? So for trade management, what I like to use is straddle strangle chart. Okay, straddle strangle chart. For people who do not know, it's a very simple tool. So you can just go here, select any symbol you want. So Nifty, Bank Nifty, any stock you want. Okay. You can either select a straddle or a strangle. So if you select a strangle, then it will allow you to change your strikes and stuff, right? You can change your expiry. You can change your strikes, whatever you want, you can do that. But for straddle, you can only add one strike price because straddle, we all know, it's the same strike call and put. Okay. After that, you can change the frequency that you want. So there is a data for every second. You can add a 1 minute chart. You can add a 5 minute chart. Okay. All of these data are available. And you can also add various indicators. So indicators like underlying. So it will show you the price of underlying. So this is Nifty's underlying price or Nifty's future price. Okay. And the gray part shows you the straddle premium. Now, what do we want when we are selling straddle? Whenever we are selling straddle, we want the premium to decrease. If we are buying straddle, then we want the premium to increase, right? So we will think of it from a writing perspective. So let's say we are writing this particular straddle today. Okay, you can look at the data from for today, right? The entire day. So from 9:15, you can see the data. You can observe the data from 9:15. So I'll just zoom in a bit for you guys. Okay, slightly zoomed in. Okay, slightly zoomed in. All right. Here, the market was somewhere around here. And after that, it has fallen down. Okay. So at least the straddle premium has also fallen down with it because the market majorly was range bound today. So you would have made decent money from here. So the straddle premium at around 920, let's say we sold at around 920. At 920, the straddle premium was, what was the straddle premium? It was 316 rupees, the straddle premium at 920. And currently the straddle premium is 257, which is decent, right? You have made decent money by selling a straddle today. Okay, market was also range bound. It has given some moves, but majority of the times I would say that the market has closed between our range, our expected range. Okay, you can add multiple Greek indicators as well. So there is data for delta, theta, gamma, and vega. Majorly, we keep an eye out on delta because we want the delta to be neutral as close to zero as possible. Whenever we are writing options, we want the delta to be as close to zero as possible. All right. So this is a good indicator whenever you are writing. We also have the data for theta. So theta, we all know theta keeps on increasing, right? So on the negative side, theta keeps on increasing. So you can see that it's a negative sale. So theta keeps on increasing as time goes by. We also have gamma. So in case if you are on an expiry day, you can actually keep track of gamma, or you can actually keep track of gamma explosions. So if there is a gamma explosion impending, or if you see a nice little spike in gamma starting to rise up, then you can go and square off your positions immediately because gamma has the ability to lose out to blow out your entire capital, right? There might be one trade where you lose a lot more money and you can lose out the entire capital. So I always recommend a hedge as well whenever you are writing. But since we are talking about intraday trades, intraday option writing, in that case, I would say you can just set a stop loss with a broker and you can automatically square it off. But again, if you are carrying it, then I would strictly say always hedge your positions. Do not enter a trade positionally, a writing trade specifically positionally without hedging it. Okay. So that is how you can use this straddle strangle chart. All right. Another thing here is the second order derivatives. So these are the primary Greeks. There are some. There is data for second order Greeks as well. So we have Volga, Vana, Charm, Speed, Color, Veta, and Soma. Now, I will not explain all of these Greeks in this video because let's face it, it's quite confusing for you guys. But in case if you know how these Greeks work, then we have the data for those as well. All right, I'm pretty sure that not a lot of traders know about this. Even we have done a lot of research about it, but it might be impossible to cover in one short video. So hence, I will not delve into it, but you can use it. Okay. One more final thing, you can set an alert as well. There's an option to set alert on this particular strategy. So you can set a profit trailing alert, you can set an MTM alert, you can do whatever you want here. You can set these things. You can set up on your Telegram and on your mobile app as well. Okay, so the alerts are also available in case if you cannot spend a lot of time in front of the screen. All right, then that is it for me. I hope you guys enjoyed. Your support has been immense and very appreciated as well. I hope you guys learned something new. I will see you guys very soon in the next video and all the best on your trading journey. Thank you so much, guys.